It's about the NBN rollout, which I've been showing you, I think, for 7 years now, getting a bit bored of this chart. Certainly need to find a new one. But I think the key takeaway from here, the big blue line is the NBN and households on the NBN, and you can see that it's basically done. 96% of households are already on the NBN. What you will see is the impact of pricing. So effectively, this forced churn event, you all know it's a forced churn event, has resulted in everyone competing on price. So the retail prices on the NBN have gone down, and that has smashed margins quite considerably as input costs have also gone up. It's just interesting to note the little uptrend on the right-hand side now. So June and July, we're starting to see a bit of growth in pricing there. I think it's an area I'm going to watch very closely. You'll probably be aware AGL and Origin are talking about doing things in the telco sector as well. So that's maybe a little bit of a short-term risk just to see if they get a bit silly on pricing. If they don't, we might actually have a return to rational pricing on the fixed line side of things. In mobile, we have finally seen a return to rational pricing. It's not entirely obvious from that chart because that chart is dollars per gig. But if we look at ARPU, what we've effectively seen last year, Telstra added about $10 to their plan for the 5G. Then we've also seen Optus add $5 in 2 months ago. And then last month in July, Vodafone add $5 to their plan. So that's really, really significant because that's the three major operators finally putting up prices on mobiles. So bad for consumers, but very good for them. So that's kind of the key thing that's showing and pointing to some rationality in pricing there. So if we then jump onto the next slide, I'll just talk more so about the telco stocks today because we have seen quarterlies from a lot of the tech stocks. But just in order of reporting, Telstra on the 12th of August, they spoke at a Macquarie conference and reiterated guidance. So we don't think there's any risk this year. I guess the key question is the outlook. In their first half result, they sort of had an aspirational target, I guess, for want of a better word, sort of quasi-guided to mid to high single-digit growth in underlying EBITDA next year and basically the year after. So unsurprisingly, that's where we and the market are sitting at. So I think they're unlikely to disappoint there. Just as a reminder, that's really significant because underlying EBITDA for Telstra has declined for 4 years. So we should actually be turning the corner next year. So that would be a major step up in terms of the underlying trajectory. And I guess in theory, there's a few things that are, should bounce back. 400 mil of COVID-related costs. So just if you bolt that on, you're already there. I'm not suggesting all of that will come back because obviously international borders are still shut. But the point is, there's a couple of things that should bounce back to make that growth a little bit easier, including the fact that mobile plans have actually gone up. And then I guess people will be really focused on post T22. Just for context, Telstra started with a $2.5 billion target of cost out. They stretched that to 2.7 and they're 83% of the way through. So they've taken a bit over $2 billion in underlying costs out of the business versus about 90% of the way through the NBN hit, and the NBN takes about $4 billion off earnings. So it's all really about what we can do to get to that 7.5, 8 bill of EBITDA that's required to hold the dividend at 16 cents. But I think they've got a reasonable path there, and I don't think it's likely to disappoint at this result or in terms of the guidance. Our view, why are we positive Telstra? It's been definitely a problematic company for a long time. This is really more about the industry thematics. As I said earlier, prices are rising. Also about the realization of value from InfraCo. I guess I've been a bit unconvinced that management are going to take the steps necessary to get there. But the interesting thing is, even if they don't, there's people knocking on their door, as was the example with mobile towers, where they got a massive multiple and the thing wasn't even up for sale yet. That was due basically at the end of this calendar year. So I think they'll get there regardless. And there are a bunch of steps now on that path to monetizing those assets. The most significant being that in early September, they'll send a scheme booklet out with an independent expert report talking about what splitting the business involves, and then there'll be a vote in October. So it's all about the monetization there and what's next. They've got a result out on the 20th of August. You've heard me talk about TPG a bit, basically saying we're in an information void with a buyer's strike. So what happened They merged about 12 months ago, haven't provided any specific guidance other than cost out and headwinds. So they've provided a small piece of the overall pie that they've had over the last 5 years, have hidden or muted the growth in the underlying high quality business, the fiber business. That's been growing at 30 or 40% per annum. And I think people will realize that now because the other stuff has gone to zero, so it can't drag them down. So I think this stock has the potential for a decent re-rate, hence happy to buy that. And then I guess the last sort of key slide is NextDC. I think this is going to be a good result from them. They are always hitting guidance. They've got a very good visibility over the business. Looking at FY22, I think consensus also looks well managed, so I don't think there's a disappointment when they come out with guidance. This is a great structural growth story with management who've been exceptional on the execution front, and a path to $30 a share over time. That would include S4. So there's some catalyst really for this. It's getting comfort in the business because there has been not much news at all for 6 months. You'll see other things like Google and NextDC plugging Google's new availability zone in Melbourne. For those of you with a slightly longer memory, in February last year, that was announced as the big CSP customer. It just gives you an idea of how long it takes to build this infrastructure. That's the equipment inside a data center that's already built. So that's 18 months. But my point is that you've seen massive demand. I talked about Google earlier, last week, and also talked about Microsoft, both doing 50% year-on-year growth in their cloud business. And that's on bigger and bigger and bigger numbers. So demand is without a doubt incredibly strong, hence the launch or the acquisition of an S4 site, and also increasing the likelihood, at least according to me, that those options get exercised in the next 6 or 12 months, which would be massive for NextDC. So really happy to keep buying that one. And then if I jump really onto the last slide, we've seen most of the news flow on the technology companies. We've all had quarterlies from AI Media, Ansarada, Right Crowd, First Wave, and even Megaport. So I don't think you're going to get a lot of new information from those stocks. Just touching on Megaport really quickly because it's obviously well held by the network. It's really just about assurance they can hit the target out there for the year ahead in terms of revenue for FY22. And I think the Megaport Virtual Edge that they've recently launched is having some good traction, so makes that reasonably likely. So I'm less concerned. I think they can hit that number now because effectively they book 5 times as much revenue on the Megaport Virtual Edge as they do on a core product, which means sell to the same number of customers and your rate of sales accelerates by 5x. So I think we're very comfortable there. And then just finishing it off, Tech One is actually the key pick in the tech space, but just pointing out they report at the end of November. They are a September year end. So I think it's actually just going to be a bit of a safe haven in this period. So I guess in closing, key picks, NextDC, TPG, Superloop, and Telstra. And then in the tech space, it's Technology One and AI Media. Thanks.